Good morning, trading world. It is July 8th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. The title for today's outlook, Boom or Burst. That's because today we pretty much have a binary situation going on, meaning only one of two outcomes will happen today. We are set up for a boom or burst. Conditions are right for a breakout or breakdown, and the probabilities are right at 50-50. Quantitatively, we are close to the edge of risk on the top side. That edge or market makers expected move is 390 or so. Now remember, if we break through and break off of that 390, professional money managers begin to have to dynamically hedge by buying into buying, and that's going to be S&P futures. Once we get above 391, it's a free-for-all, and the script goes out the window. From that point, we can end up all the way up to 397. Speaking to the other side of the binary outcome, we have stretched the rubber band out to close to its max. If it doesn't pop, it's going to snatch us back and possibly overshoot the rubber band's relaxed state. So either way, we're looking at a decent sized move. Everyone can see the decision area or junction point. So now you have people stacking orders on either side of this blow up to B. And this is what slows the process down and compresses us back and forth a couple times before the break. Once we break, one side realizes they're wrong and they have to close those orders. So if we break out to the upside, there will be a lot of people who sold calls and or bought puts thinking the market will go down. But since it went against them, they have to close those orders or stops get triggered. Either way, if you sold a call, you have to buy a call back to close. If you bought a put, you have to sell a put to close. Both of these actions add positive delta to the equation, forcing the market up, or vice versa for the downside. All right, now for the part that's more art than science. Reading the indicators and trying to get a technical balance or analysis on which way this thing could break. The hourly chart is in control and has a 6-to-3 bullish bias to it. The 30-minute chart is next in the pecking order and has an 8-to-1 bullish bias. And I know people are probably asking questions like, where are you getting this 8-to-1 and 6-to-3 bullish bias? Well, there's a lot of work that I do before market, and I've probably made mention to it before about a data sheet that I usually use to compile a lot of the data that I look at. And this is pretty much it. I'm going to cut it off just to the 4 hour because the data sheet has holes in it, and I've been trying to get programmers to help me kind of because I get tired of having to plug everything in manually. I want to automate the sheet to a level bigger than what I can do with Thinkorswim's RTD. So this is what I'm talking about when it comes to the bullish and bearish bias, because once I compile all the data I get, which is my personal opinion or how I look at certain indicators, a bullish or bearish hue to each time frame. Now, this is where we have to be very careful, because right now the readings are 8 to 1, 2 to 7, 8 to 1 on the intraday time frames. The reading changes with each change of the 30-minute time frame. So if it goes bullish 9 to 0, we're usually looking at the precursor of a bearish pullback. So that's what we're looking at, and that's what we have to be careful about, because we're right on the edge where things could change at that 8:30 and then again at that 9 a.m. and then 9:30 a.m. hour, where things could change big. As we can see, we just hit a big spill out where we touch kind of the top, that what has been what was the previous close. We came up to it, touched it, and we rejected it. So that's expected, and we're probably going to do that again. But if we go back, we've already done it 3 times, so that third time could be the charm where we break through. You never know. So those are the conditions that we're in right now. Pretty much a 50-50 short squeeze, basically, waiting for the breakout to happen one way or another. With all of that being said, let me get to the key levels of the day. All right, here we are with the key levels of the day. Starting on the resistance side, we know 389, 390 is going to be very, very hard to crack through. It's probably going to take a couple times. If we do break through it, it's probably going to take a couple tries where we reject off of it, come back, reject off of it, come back, and boom, a bust through or breakout. So that's our Jack resistance area. Our Queen resistance area is 391 to 393. Then our King resistance area is going to be the 394 to 397 area. If we really boom, I wouldn't be surprised if we ended up at this 397 level. On the support side, our Jack support is 388 to the 387 area. And being that we're in the midst of a short squeeze, I won't be surprised if we kind of load back and forth, bounce back and forth until we break out one way or another between the Jack or Queen support and resistance levels. Now, the Queen support level is going to be 386 to the 385 area. Then we have the King support area, 384 to the 382 area. And we need to be aware of the 379 level below, because that is the major channel. That's the bottom of the major channel that we're in. Because we could really get moving if we break down. I'm going to be looking for this 379 to kind of hold us in. If not, like, they will really be going for it today, and we're probably going to catch some of that going into Monday. When I said catch some of that, I mean continue some of that sell side activity going into Monday if this 379 can't contain us. So those are the levels of the day. Now, the main thesis for today is bearish, closing below 388.99 with a projected target low of between 386 and 379. I'm going to tell you to be very careful of the thesis today, because to me the thesis doesn't mean much of anything, being that the main thesis is bearish. Because remember, we're at a binary decision where we're going to break out one way or the other. We could break out to the upside, or we could break out to the lower side. The alternate thesis is bullish, closing above the 388.99 with a projected target high of between 391 and 397. Again, the current main channel we're in, or major channel, is 379 all the way up to the 397 area. With that, let me bring up the key or the scenarios of the day. All right, our first scenario is our trend day down structure. We could open up with a pop back towards the previous close, find resistance on or before that previous close, then begin the downtrend for the morning. We're likely to find midday chop around either the possible queen or king support area. We could continue to compress between the queen support and previous close before the true breakout happens. And it is possible that we could likely go for it for a bit. But remember this 379 area. That's what I'm looking at to try to corral us and hold us in. But even more than that, we have a retracement area around 384 that we're likely to test and try to come back up. And if we break below that 384, then that 379 is in play. All right, that's the first scenario. All right, our next scenario is the expansive range day structure. We could look to set a decision area low boundary around the jack or queen support area, more so the queen support area. I do have a retracement warning around that 384 area. This is why I was looking for a pullback, or I said talked about a pullback in yesterday's pre-market between yesterday and today, and that revolves around that 384, 385 area. We can get that pullback while we wait on the squeeze to play out. We get back above the previous close only to reject, And then from here, if we get another crack at it, it could be the breakout or break down, which could be here. So that's our expansive range day structure. And let's bring up the last scenario. Our last scenario is our rounded reversal day type structure. We could get a continued push lower toward that jack or queen support area and find midday chop around either the queen or king support before spending the same energy we use going down to come back up the second half of the day. This usually always carries a vice versa warning, which would look similar to this. So those are the 3-day structures, focusing in on the trend day down and the expansive range day structure today. We'll see what happens or how it plays out, because we are definitely kind of set up for a big move or squeeze, whether it happens before market, because I was looking for a pullback to happen at some point, and then we'll figure out whether we get the breakout or breakdown from there. I hope this helps. As always, please know and understand your risk, because your primary job as a trader is to protect the capital that you have first. As always, wishing you a positive trading day. Have a great one.